Hi everyone, welcome back to Martina channel, your go-to source for insights on investment and global economy. Today, we are diving into December FOMC meeting, which is truly shaking up the market and could reshape how we think about 2025. This meeting was expected to be predictable, 0.25 rate cut as usual, but the surprise was plentiful. Let's unpack the three major surprises and discuss what they mean for the economy, markets, and more importantly, your investment strategy. First, the Federal Reserve adjusted 2025 Fed dot plot, which is the interest rate forecast. Back in September, the Fed project 4 rate cuts, but now they are saying that there might be only 2 cuts. Why this seems subtle? It spooked the market because hearing it directly from the Fed makes it official and the trader panic. Second, the Fed added some new words to their statement. Instead of hinting at steady rate cuts, they emphasized that the size and the timing of future rate cuts would be carefully assessed. This signaled a much more cautious approach to monetary easing. Lastly, the Fed revised its economic forecast. They expect higher inflation and stronger economic growth, with unemployment remaining low. This paints a picture of robust economy, but also one where inflation is harder to tame. So, what does this mean for the year ahead? The biggest takeaway is that we are entering a new era of uncertainty. Markets previously assumed rate cuts would continue, but now we don't even know when the next one would come, when and how long Fed gonna pause. And as of now, the odds of January next year rate cut looks really slim. What about impact on the market? Let's look at how this would impact the market, financial market. For US dollar of course surged, rising about 1% against major currency. And the Fed's cautious stance boosts real interest rate. For Thai investors, this means that Thai baht is weakening to about 34.65 against the USD. For bond market, of course, short-term bond yield jumped higher than long-term yield. 2-year US Treasury yield is now about 4.3%, which is about equal to Fed's policy rate. That means that now the bond market assumes that there will be no cuts next year. Meanwhile, 10-year US Treasury rose to 4.5%, signaling tighter financial conditions. For equities market, the stock market, of course, took a hit. The S&P dropped on that day about 3%, and Nasdaq fell about 3.5%. Among the big tech names like Tesla led the loss, plunging around 11%. Other giants like Amazon, Microsoft, and Alphabet dropped about 3 to 4%. Why? Valuation have been quite sky high, and I think any shock, even if it's just subtle, it could come as a surprise, such as hawkish surprise from Fed, can cause a rapid sell-off. So, what should investors do? How should you position your portfolio in this environment? For bonds, I think long-term bonds may be more attractive than the short-term one. With the slower rate cuts and sticky inflation, the yield on the long-term bond could decline more significantly, offering better returns. For stock, the stock market, of course, faced a headwind from tighter financial conditions and rising yields. Be cautious of high valuation growth stock, focusing instead on value stock or stable cash flow. For currency, the strong dollar may benefit Thai investors actually who hold the foreign assets. But beware, if the dollar weakens in the future, this would trigger an outflow from USD-denominated assets. So, prepare for the worst, right? I think the worst case scenario is that there will be no cut at all next year, but the chance is really slim. What about the best case? I think now the market is already set expectation that there will be 2 cuts. So the best case would be the Fed could cut more than 2. Either way, the US economy, I think, can be able to withstand and remain resilient, which is reassuring. So what's the bottom line? The Fed hawkish tone suggests a challenging road ahead, but opportunities remain if you know where to look. Stay informed, stay proactive, and always keep your portfolio diversified. Thanks for tuning in to Martina channel. Don't forget to like, share, and subscribe for more market insights. See you in the next video. Bye.